Good evening, everybody. Welcome to the Locke and Your Success Trade and Market Update for September 30th, 2012. As we were saying last week, we were expecting a sideways to down move in the markets. We were a little bit overextended, and it shouldn't be a big surprise to anybody that we came down and touched our 20-day moving average in most of our major indices. So let's take a look at our charts. Here we have the SPX. We backed right down into the 20-day moving average, as we were more or less expecting. I absolutely did not think the pullback would be quite this deep, but we did have some bad news on Monday, a lot of unrest and so forth going on, so that didn't help things any. Pulled us back. NASDAQ pulled in a little bit under the 20-day, and we had that bounce. The Dow hasn't quite hit the 20-day, and our Russell is pretty much meandering at the 20-day. So again, this was an expected move. One thing of noting, we are starting a new quarter. So with this new quarter, we're not quite sure what the big institutions are going to do, whether they're going to start buying or they're going to want to sell this thing off. All I can say is, from a pure chartist standpoint, we are still extremely bullish, even if the pullback continues. You can see here, this is a nice ascending triangle, a very steep ascending triangle, and we are poised to break out. If we do, we could go considerably higher. The SPX here, same type of thing. We're breaking higher, and the NASDAQ, we're breaking higher. So in general, the pullback we got last week, I would say, should be completely expected. It's nothing out of the ordinary, and where we go from here, we don't really know yet. It wouldn't be a surprise to see some of these indices come down a little bit further, maybe even to a more horizontal support level. But then again, it wouldn't be a surprise to see them continue up. So this is going to be a wait and see week, and depending on which levels we crack, will give us a better indication of which way we're going. But like I said, even if we continue down, I'm still looking for a point where the aggressive buying comes in and the market's going to take off. So neutral for the week. Let's take a look at our positions. First, we'll take a look at the October M3 trade. This trade here had two adjustments last week. First, what happened is on the 24th, the market looked like it was going to bottom here and possibly take off again. Intraday, things were looking kind of strong, so I ended up purchasing two bullish vertical spreads. This was the position we were sitting in on the start of the week. When the market started pushing up, it made sense to add two more vertical spreads, take on flatten our delta a little bit. I actually did that a little bit early, and I got bit for it. So the markets pulled back relatively hard from there. When they did pull back, I started taking on too much downside risk. Didn't give me a whole lot of choice. I ended up rolling half of my 820 butterflies back to 800, and I did them one at a time. So that's rolling the 820s back. And even there, I was taking on a little bit too much downside risk, so I ended up having to pull 5 of these 830, 840 call spreads. And this is the position we're sitting in now, right here. So as of right now, we're a little bit more negative delta than I'd like to be, but not terribly so. It's still a really good position. We'll see how this goes. If the market goes up, we're going to be adding some more verticals and possibly rolling these butterflies back forward. If the market kind of stalls like I think it's going to do, we should make out pretty well here. Like I said, we're reduced profit target this month because we entered really late. I think I can get out for $2,500. This trade is gone, and I'm moving on to November. But so far, so good. Trade's up around 1,000, and things are going well. And the only other trade we have on is the November Bearish Butterfly. If you remember, we put this on a little bit early. We put it on right, I believe, on this peak day here. And the market's done nothing but pull back. So this has been a pretty boring trade. We just kind of entered, and we're waiting for the market to take off forward so we could scale in, and the market's done nothing but pull back. So it pulled back right to the peak of our T+0. That's perfectly fine with me. We can sit here for the next 2 weeks, as far as I'm concerned, when we'll either just leave 21 days to expiration with a bit of a reduced profit target, Or, of course, if the market moves a lot, we may be able to scale in some more. But this trade is looking really nice, and there's not a whole lot going on there. So just to recap, the market is in a normal pullback. Trades are going well. And one more thing I wanted to mention before I go is our delta between our Thinkorswim and OptionView platforms has actually come right into line towards the end of last week. And we knew, and I think I've been talking about this, we've been relatively up or sideways the last 3 months, and the skews, put call skews, have been terrible, throwing off the calculations in Thinkorswim like crazy. This little pullback here finally brought us into line, and the Greeks were good last week. So we'll keep an eye on those two and try and keep you updated with that. But that's it for now. Have a great week, everybody, and I will keep you updated with any changes. Thank you and good night.